Hey Jeff, let's get right into it. I really appreciate your content. You have a great book. You've really changed my perspective, my perspective of where the world is going, where things are going in the future. I think reading your content has been a massive paradigm shift. How are you?
I'm great, and thanks for having me. We just off camera, we were just talking. I got a note from one of my friends who's a MicroStrategy board member that was sharing your content with me.
Wow.
So just love that. I love what's happening. This is spreading from one mind to another, and it's just building. That's how great change kind of moves across society. Anyways, once you see the truth, you can't stop seeing it.
That's exactly it, right? I mean, I think Bitcoin is the red pill, and the world is the Matrix. I mean, I saw this tweet. Somebody said it. The Matrix is a documentary, and I think you're the one who delivered. I think Saifedean gave everybody the basis, and then you gave everybody just you pushed them over the edge. And that's what happened to me, at least. I think that's exactly what happened. I think if it weren't for your content, I wouldn't have understood that. I don't know if you've seen my content, but I constantly say real estate is a Ponzi scheme,
Yeah, yeah,
and it absolutely is, right?
it
I
absolutely
want
is.
I want you to explain your thoughts on one quote that really stands out from you. So, one thing that really stands out from you that you constantly say is the natural state of the world of the free market is deflationary. Can you explain what you mean by that?
Yeah, so the natural state of the free market is deflation. And why? Because we're an integral part of the world we create. We use things that give us more value, and those things that compete to give us more value compete against what was there before. So if we're part of the equation that drives the things, products and services that we use that give us more value, then the output of that has to be deflation. Entrepreneurs all over the world globally compete to deliver you more value, and you choose the things that give you more value. If those entrepreneurs created less value for you, they go broke.
Mm-hmm.
So just the output of that has to be deflation, and it actually, ironically, always has been. Just now at a faster rate because we build innovation on top of more innovation.
Mm-hmm.
Um, and all of those ideas in service to mankind are kind of, we stand on the shoulders of great people who went before us, and constantly innovate on that. And anything that stays stuck, then anything that's stuck, or let's say a monopoly tries to create um, a monopoly on something when without regulation, what would happen? Right, that monopoly would have higher margins,
Mm-hmm.
and all of the ideas from the free market would be attacking that because it had higher margins. So you would actually reduce prices onto that monopoly. There is no such thing as a monopoly in a free market.
I want to explain. I want you to explain. I know you're going to go a little deeper on that topic, but I
Yeah.
want you to explain why is it that the the monopoly is going to have higher costs? Why is it that their costs are going to be more expensive than, let's say, a free market?
Well, typically a monopoly is only granted a monopoly through regulation, right?
Right.
So you're the only one who can compete here. So monopolies favor regulation because it forces out other people, it forces out the
Mm-hmm.
free market. So those natural monopolies create higher prices because the free market doesn't attack them, because it can't
Mm-hmm.
attack them. And so what is this, if you just played this forward on both things that we're talking about? If the natural state of the free market is deflation, if you just start there, and you know that that's true. I've had a lot of people kind of come to the realization that that was correct after a long time of fighting it, right? Of oh my God, if this is true, then my entire world is upside down. And then so they would hold on to the things why that couldn't be true, try to kind of create um, a challenge in their a challenge in their mind as they tried to to make kind of the free market as deflation, and how do we live in an inflationary world then? What does that mean? So the inflationary world that we've always lived in, or instead of say inflationary world that we've always lived in, humans have always lived in an extractive economy.
Mm-hmm.
Extraction was at its core. And so you could if you use the sun never sets on the British Empire. What does that look like? It means I invade other nations. They're slaves to my nation, and I aggregate their labor and their materials for way cheaper through kind of a war machine. But and the people inside the country that is extracting more from other people, and the people inside that country don't realize there's extraction from them too, because it's less so than
It's
other
slower.
nations. It's slower, so they don't realize it, and they think they're winning.
Mm-hmm.
Versus, and they are winning versus the other nations that they're extracting from. But then, because those centralized systems always end in chaos, and more people within the country get extracted from it at a greater level too, you would always go to war, global war, conflict, to reset those currencies. Winner resets on a currency, and the whole thing starts again. And now we just run that extraction from a monetary system that is modern day slavery for probably 7.5 billion people on this planet.
Mm-hmm.
And the 500 million that it isn't as much monetary slavery from, it still is extractive, right? But and now you're starting to see, like if you said the US dollar imperialist system has to have counterparties around the world that have way lower price labor. And those currencies constantly have to fail so you can extract their raw materials and labor cheaper to service yours. So we've always lived in that extraction, and that's why that statement, that natural state of the free market is deflation, that I make all the time, is that should be the world we live in. Yet we don't have a mental model for that world, because we've always lived, all our history books, everything we've ever done is on top of extraction. So we have a hard time even understanding what it could look like, because we carry our baggage from the other model through 5,000 years of human history into this model that Bitcoin's is imposing free market discipline to the world.
Wow. Yeah, that's see, that goes so deep, because I actually have 2 points that I want to make. So the first point with your monopoly point is, I think because Bitcoin allows people to save, because it doesn't punish them for investing or for saving. Yep. Individuals can start their own businesses because they have their own savings, so they can actually challenge the companies that are trying to build a monopoly. And I think that's something that people don't quite get.
Yeah, so that it's connected. It has to be connected. So we could take this as deep as you want.
Yeah.
It has to be connected to our minds as well. So everything that came before it is really, our ideas reshape our world, right? So, and our ideas, our actual thoughts of what the world could look like, come from, or emergent from, the world we live in. So we're all connected through this layer, right? We're all connected through trade all over the world, and we find things. Let's use the printing press as an example. What happened there to drive way more productivity in the world was, you had a control system, and then you had an innovation that moved the control system. It gave an ability to kind of more people to contribute their ideas. And then those ideas, scientific method, could be error corrected, and more people could contribute to the knowledge base of the world. And we moved faster. Now remember, a lot of that, what we're talking about, we reside on top of.
Right.
That without the printing press, some of those people might not have even been found to be able to contribute to your way of life today. And so when you think about this, the free market is the only thing we've ever found that will cooperate with people that we don't like, because we both win by that cooperation. So moving from an extractive model that had to be extractive, and it's the only model in history that we know of, and every single political system is on top of that, to a cooperative model, must carry big consequences. It must touch everything. It must, because it must also be part of our mind and the way that we think. And imagine moving 8 billion people on top of a cooperative model where they're all contributing to all of us, because now that you can unlock their minds instead of them being financially repressed into a model where they can't pay their bills, feed their family. They are slaves to an extractive system. So that unlock is so massive. It's hard to describe in words because it's so massive, and we're really early in that unlock, but it's inevitable. That's where we're moving.
I think another great point that you've made in the past is that, like you said, it's unlocking something that everybody can create value in. But I think what you have said in the past is it's a lens. It's essentially just you're changing the lens of what you're looking through. It's like having rose tinted eyeglasses versus just regular eyeglasses. When you have or it's almost like the honeymoon phase of a relationship, right? As soon as the honeymoon phase is done, as soon as you start seeing what's really happening, it changes your perspective. And I think that's what's happening around the world, right? There's people around
but instead of saying rose colored glasses or something like that, say it like this. If if you're a Tibetan monk, Wall Street banker, or mother trying to care for your kids in North Korea, every one of those people probably has vastly different experiences. And each one of those people, the world that they experience is true for them, which is largely driven by their environment.
Right.
Not fair?
Yeah.
So the world you would see, the world that most people see, maybe less you, but most people see driven from their environment, is one of extraction.
Yeah.
And it is as real for them as ours is for us in Bitcoin, right? But it is a different, and both are true right now. So if you said, and you talk about housing all the time, and which is we could go deeper on that. But if the world you see is prices go up, and we know that prices only go up because money is manipulated, right? Then and the natural state of the free market is deflation. Then the protocol that is bounded by energy, the open, decentralized, and secure protocol bounded by energy, should be telling us the truth of houses, right? So houses versus that protocol should be falling in price, and they are, right? Every year they fall more and more, or every any 4-year cycle they fall. Energy prices also fall. Medical expenses also fall. Food prices also fall. Anything measured by Bitcoin, which is the protocol, is falling as I would describe. So there you go. Median price of new home.
This chart is just crazy, right? Like it shows you the picture. It shows you everything.
So that is true, right? And that is the energy-based system telling you the truth. And some people are measuring houses, though. If you measure the houses in the fiat-based system, the pieces of paper, you see the opposite. You see the green line that you're describing there.
The green.
And then exactly. Now, if you take, and both things, depending on your measure, will be true for you. Your objective reality is measured by, if you're not measuring from the objective reality that is the energy-based system that can't be manipulated, then all prices relative to your measure that is being manipulated will be rising.
Yeah.
Furthermore, if you take Bitcoin and then convert it mentally into your fiat currency, it will look like Bitcoin's rising and all the prices are rising, and Bitcoin's rising faster than prices. That's what it would look like to you. But that's just an observation error, right? Or that's the observer watching their environment and observing. And Bitcoin is like, you can prove from what you just showed, and over and over and over again, that my objective reality is real, right? It is based on physics. It is based on energy. It is based on the free market. And what would I expect to happen in the other system? All of the things that I'm watching play out in the other system. And so for a long time, I haven't even cared, right? because you can imagine how people will fight, what they will do, how they'll try to consolidate this, how they'll loan against it, how they'll do a whole bunch of things that are still to come, right, as they're trying to co-opt this system too and get more of this. All of these things are still in front of us.
Yeah.
Well, if you just measure in Bitcoin and hold in self-custody, then you'll see prices falling forever.
Right. So do you, I don't know if I've heard you talking about this before, but I don't personally think that the way that fiat currencies exist today, I don't think that people are going to want them if we go to a Bitcoin standard, right? As Bitcoin spreads, like I guess the mind virus spreads, more and more people figure it out, more and more people understand it. I don't think they're going to want fiat.
Yeah, so the transition is probably a lot longer and a lot more nuanced than you just said, right? So
Right.
if you go around the world right now, most people want US dollars. They don't want Bitcoin.
Mm-hmm.
So they want Tether. So what is a stable coin? And
US
so
dollars,
how many
basically.
people would it's something to guarantee losses at the same rate as a currency.
Right. Oh, wow. Wow. That's just like, just that thought, that's insane. Yeah.
It's guaranteed to lose money.
Yeah.
The stability comes from a guaranteed loss.
Right.
Right. So you're trading volatility for a guaranteed win, for a guaranteed loss for stability.
Yeah.
And most people are making that trade, right?
And you can even get, oh, sorry, go ahead.
Yeah, and they're making that trade because the US stablecoin or USDT Tether is more stable than their own currency. So it's a relative trade
To them, yeah.
to them, and that's why they're making that trade. So if most people are doing that, then it tells you how early we still are in this.
Yeah.
And then now play that forward. One system, the US-based system, and that do not dominate in the world, then has to still be inflationary.
Yeah.
Right? And so every single thing on top of that, more and more people centralizing their actions by thinking prices going up, are actually making the US dollar system stronger. And then other currencies relative to it have to break faster. So labor is going cheaper in those, right? And that makes it more dominant.
Mm-hmm.
And more people will trade in the US dollar system, Tether, because of their own currencies. And they won't see the thing that we're talking about.
Yeah. I was talking to a friend about this morning, and he was saying exactly what you're saying. He's like, no, US dollar is going to last forever. We're never going to see the US dollar go away. It's what everybody uses. Tell me about Bitcoin once everybody starts using it. And I think he doesn't see that when that happens, Bitcoin's not going to be at $90,000. It's going to be in the millions. Right, because everybody's going to be who's going to, at that point. I don't think people are going to. Maybe I'm getting ahead of myself, but I don't think people are going to want US dollars at that point. If you know that if you're creating value, let's say I actually had a conversation with somebody from Dubai yesterday, and he was telling me, I want my country to accept Bitcoin for oil. I don't want them to accept US dollars. It doesn't make any. Why are we accepting these pieces of paper that can be created out of thin air? And it makes complete sense, right? When you put in the effort, when you put in the time to produce these things, what incentive do you, I mean, right now, of course, it's different, but let's say in the future, 20, 30 years down the line, when everybody has Bitcoin, when it's widely distributed, what incentive do you have to take Bitcoin or to take US dollars from them? I think I'd rather give a discount for accepting Bitcoin, if anything, right?
So that's it. Now we're talking about two different things. So layer one, layer one being the energy back system, the protocol. And so think about the layers of the internet, TCP/IP being layer one of the internet, but developed in the late 60s by DARPA. That's Bitcoin when I say open decentralized protocol. Layer two, the interoperability layer, Lightning, Liquid, Arc. It's different. That's going to be a payment layer, the interoperability layer across everything. It already is, and it's growing faster than the internet. So that means payments are working in this, and the trade-off on the first layer was you could only do 5 to 7 transactions a second. And then on the second layer, though, you can have almost unlimited transactions, almost unlimited velocity in money through peer-to-peer trade of money, bound with a bearer instrument in it, right?
Yeah.
So, but that has to happen. So Bitcoin needs to be used as a medium of exchange to stop it from getting consolidated. So if it failed as a medium of exchange, it would fail as a store of value. Does that make
Yeah.
sense?
That does
And
make sense.
yeah,
Because if oh no, go ahead. Go ahead.
and why? Because what it would say is everybody chose their time instead of holding it self-custodial. They concentrated this into, and they used US dollars on top of it, and that would further and further concentrate it, and it would be
Yeah.
manipulated and then attacked from layer 2. So if layer 2 is US dollar, then Bitcoin would fail in time.
Yeah.
So
Wait. So can you explain that a little further? Why would it concentrate wealth? I mean, I get what you're saying here. It's basically people aren't giving it away, so they keep getting more and more Bitcoin. But can you explain that in your own?
yeah,
Maybe I'm saying it wrong.
so look at what happens to gold, right? So because gold needed to be centralized, and then you're used to using the derivative instrument of gold on top of it.
Yeah.
What happens to the incentives on top of that is, let's use a real example. Bank A early on says, I'm going to keep 50% of your gold in reserves because people don't need it all the time, right? And I'm going to give you a higher interest rate because I have 50%. And Bank B says, I'm going to do 30% and give you a higher interest rate. And Bank C says, I'm going to give 10% reserve and I'm going to give you a higher interest rate. And what we do, is we go to Bank C, right? And so there's a natural incentive in the market to use the person who's trying to give you the biggest rate,
Right.
which consolidates, and then it blows up because they don't have the gold. When everybody comes, it creates a bubble, right? And then when you want your gold back, it's not there.
Yes.
And so the same thing is likely to play out in Bitcoin as people are trying
Okay.
to lever and try to create more yield in Bitcoin, because the yield is the other system, the credit-based system. And a
Right.
whole bunch of people are going to get liquidated in this. And then some of these institutions will hold massive amounts of Bitcoin that won't be able to pay out the counterparties on those massive and likely kind of this is hard to say specifically because there could be chain splits. There could be, if you hold your Bitcoin, you're still safe from that. But a repricing event of Bitcoin, or for a long time, just a massive derivative markets that suppresses Bitcoin price through paper instruments, and nobody knows how much paper is created against it. Just like nobody knows how much paper is created against the gold markets today that can suppress price.
But do you feel like with Bitcoin it's a little different though, because you can take self custody, you can take, because it's a bearer instrument, anybody can take self custody. It's not like with gold, for example, you had these vaults and you had security and you had all these requirements that were in place in order for somebody to hold that gold for you. Because if you don't have let's say for example, if you have $1 billion worth of gold, you can't really hold it on your own, right?
Yeah.
You're going to hold it with a bank. With Bitcoin, it's different because Bitcoin, all you have is a key. It's a 12 or 24 words, right? So do you think that could change it?
So absolutely. And the reason I say that is most people right now don't self-custody, right? You do, right?
Yeah.
And when you really understand Bitcoin, you do. But most people make the trade-off to buy in an ETF or MicroStrategy, or a whole bunch of others. And what do you think is going to happen as we accelerate down this path? Will more people make that trade-off because they've always made that trade-off, and it seems, or Tether,
Yeah.
right? Or and then what would it look like to the centralizing force to go after those honeypots, right? To reprice. I'm just saying the natural case of the markets looking like them, they look like they do because of our fear and greed and our ability to take to take that easy choice to centralize
Right.
and listen to.
Convenience.
So we think it's everybody else, but we are also, just like I said, in the free market, we're a part of it.
Yeah.
In this, we're also a part of it. Why this inflationary system exists, and if you use housing as an example, how many people would allow the entire market to collapse? Right? Like, so if a
Probably not many.
government, so we yell at our governments for printing money to
Yeah.
make prices go up, but how many people would actually say no, let it all collapse, we'll start again? No one.
Not many.
No one, right? Like almost
Yeah.
no one, because the outcome of what that would look like on society would be horrific. So we say it's everybody else, but it's us too.
Mm-hmm.
And so if you know human nature and you understand human nature and what people say they will do versus what they will likely do, then you can be honest with the real what other threat vectors arise, what it looks like, and then you can build paths forward. So I'm not worried about Bitcoin being consolidated. By the way, I'm not worried about it being, because, but I am. It's going to be way messier than people believe, and a lot of people are going to get burned over and over and over again because they're playing with rules from an old construct,
Mm-hmm.
trying to understand the new construct, and it's bound to be confusing.
So do you think that MicroStrategy could be a part of the, I guess, do you think that they could have their, I guess this goes into almost like a pivot, but do you think they could have their Bitcoin confiscated from them just like any other major entity? Because they have 320,000 Bitcoin now?
Yeah. So at some number,
Yeah.
at some number, I Michael Saylor's brilliant. He's playing a cheat code here. He's doing a really good job of it. But at some number, you'd have to say that there's a risk of that. And,
Yeah.
and it's not just MicroStrategy. If you looked at, I think 10 of the top 12 ETFs and everything else, so that they're all Coinbase custody.
Yeah. Wow.
So it doesn't. It's a massive honeypot.
I think Coinbase has like 2 million Bitcoin or something like that.
Yeah, so something like that through.
Yeah.
So you wouldn't have to go to attack everybody, and that, but more likely, what would happen from that, because people would be making that case stronger over time. More likely, what would happen from that is they would try to make self-custodial harder down the road from that. They would make and kind of people would choose, oh, it's okay, it's not that big a risk.
Yeah. They'll name them self-hosted wallets, unhosted wallets. They'll give you these names that scare you.
Yeah, and it may be easier to use try to make it easier to use the US backed system on top of Bitcoin.
Yeah.
And all the rails using that system would be easier to. It would act like Swift today, and it would, in time, it might be harder to transact outside of that system unless you were aware of that risk. Now, I'm vastly aware of that risk. I have been since it came in Bitcoin, and so are many other Bitcoiners, and that risk has been mitigated, is being mitigated as we move forward. But if it wasn't kind of for the free market and a whole bunch of people already seeing it way before it would happen, that would be a natural risk that would consolidate, just because humans take the easier path.
Yeah. So with something like MicroStrategy, with a company like MicroStrategy, how far do you think they can take their strategy? How far do you think they can go? Do you think they could get to 1 million Bitcoin?
I don't think they can get to 1 million because
No.
because price at some point is going to
Explode.
Price relative to the fiat currency is going to explode. But I can't tell you when that's going to happen. But I can't see them getting to 1 million Bitcoin.
But they've been making bigger and bigger buys, right?
Yeah,
like today's buy was 50,000 Bitcoin. I mean, it sounds insane. That's all of what Germany dumped in August, was it?
Yeah.
That's crazy.
It's amazing. Oh, it's amazing that that they're running at 21 billion ATM and the stock went up.
Yeah.
We're going to dilute our shareholders by $21 billion over the next 3 years, and it won't be 3 years. He probably does it over the next 12 to 18 months, and the stock goes up.
Yeah.
Name a time in history that you've ever seen a CEO talking about
Never.
doing the never. So it's
Never.
it's and that playbook is open for anybody else to use.
He might actually get his 21 billion done by the end of this year. He's already at 7.
Yeah. Yeah.
Right? Do you
Yep.
think that's possible? Do you have
So yeah, I wouldn't put it past him just
Yeah.
because he knows the game we're playing. Right?
Yeah.
He knows the game we're playing, and there's a lot of people that, so the earlier he buys, he knows he's better off.
Yeah. There's going to be countries that can't get to even 1,000 Bitcoin. Even do you think?
I told him at a this you could find it. I'm not on Twitter anymore, but you could find it in my old tweets. The when he first started this strategy, somebody asked, when will Apple see this? And I said, when Michael buys them, when MicroStrategy
Wow.
buys Apple, and we were at dinner a couple weeks ago, 3 weeks ago,
Yeah.
and I told him that. He had a laugh, but that's what's like. It's by the time these others see it, it's going to be too late.
Do you think that could actually? Do you think they could actually surpass Apple's? I mean, I personally think they could.
Yeah, no, it wasn't just tongue in cheek. I would say it will happen. Not
It
at least
will.
it will happen. He won't want to buy it, because what you'd have to understand in Bitcoin, and this is what we think about in our venture fund, the risk-free rate of the world, the non-counterparty risk-free rate of the world, is between 45 and 50% IRR.
Mm-hmm.
So you should only make investments where you can exceed 45 to 50% IRR. And the only place I've been able to find that investment, and Michael's finding that investment because a whole bunch of people will trade those pieces of paper so he can capture the gain, which is crazy. So that's one way. And so if you're a public company, you could utilize that strategy and turn your balance sheet into a treasury asset that instead of kind of having cash that's losing value. So that's a really good way if you're a public company. The other way is by investing in an ecosystem and having entrepreneurs build balance sheets because of the value in Bitcoin, because of the value that they're delivering. So, and that's another path forward.
So he's almost giving people an incentive to do this because he's almost creating a constant bid.
Yeah, he's created an entire market for people that are trading. So you know what's happening in housing. So all housing is losing value to Bitcoin, and it will continue. But there's a lot of people who are trading housing, thinking they're making money because they're making money versus other people who are in worse asset classes.
Right.
And so all of these trades in the existing system, they're all losing to Bitcoin. But all of those people in all of those trades think they're winning. Right. And so he's just opened up a whole bunch of people that think they're winning in a 5% bond or a 2% coupon or 0.9% coupon. And he's buying more Bitcoin with it. So he's arbitraging that trade.
So do you think that without some kind of Bitcoin without some kind of Bitcoin exposure on bonds, is there even a reason to buy bonds anymore for most people? Because if people are buying bonds for, let's say, 10 years out, then
you're it's the same thing as Tether, right? If you're doing that, you're losing money.
Guaranteed to lose.
You're mathematically for sure guaranteed to lose money. And it's going to be worse going forward than it looked at like over the last 10 years.
Yeah.
It's going to be way worse.
Yeah. And I think TLT has lost, 50%? The 20 plus year index.
Yeah.
That's crazy. That's never happened before.
Yeah.
Right. We're going through it's I think you've mentioned this before. It's a paradigm shift. Everybody's seeing the US dollar as something that's stable, but this belief is changing. The US dollar is not stable. It's that it's artificially kept stable so that we keep thinking that we should hold on to it.
And relative to other currencies, it's stable.
Yeah.
So
Exactly.
it's every currency is losing value, and they're all
Yeah.
losing value at different rates. And if you just take Bitcoin into any currency and then compare Bitcoin currency after currency and currency, you'll see the relative rate of loss against Bitcoin in every currency, and it's different. The US is the best out of all of them. So it would, for people measuring through fiat, it would look like, and not understanding Bitcoin like you do, like I do, it would appear to them that they should save in US dollars.
And then I think the drawdowns with Bitcoin, the 80%, 70%, 60% drawdowns, they kind of keep people away because they think, they make them think that, oh yeah, I was right. This thing is going to zero. So they don't buy it. They ignore it.
Yeah, and those drawdowns, I think the like we're going to say, I guess we'll see what happens. We're truly going to go through some crazy times, like mind-numbing times, because there's never been something like this in the world.
Never.
Never. And what happens when no one will sell?
Yeah.
Like what price? What is price discovery if people really know what this is?
Yeah. Yeah.
Right.
It
So
could go.
to like you could the Samson's God candle, what these candles could look like.
Omega candle. Yeah.
Omega candle, like it just because they could easily blow your mind, because it's just, you have to, how many people in self custody right now aren't selling for, like, doesn't matter. Like it could
For
draw
anything,
down
yeah.
80% for nothing. They know the game they're playing, and they're not selling. And now once you understand that, you have a whole bunch more people learning why. At some point, it's a pretty wild number.
I think every time somebody sells Bitcoin, the chances of it going into the hands of somebody who's going to hold forever just increase and increase and increase. I think I don't know if you maybe know the numbers on this, but I saw something where it said how 67% of coins haven't moved in a year.
Yeah.
Something
So
crazy like that.
It's a big number.
Yeah.
And that number is, I haven't followed it in the last little bit, but over this last bear cycle, coins didn't move.
Mm.
Most coins didn't move. So it's a small float of those that are moving, trading in it out, and eventually at some point, and we probably all know people. I know people who were trading, right, and then got caught short and never have the Bitcoin back. Right.
Yeah.
And once you've done that, normally what I find, people have to do it 2 or 3 times before they realize that if I just held it, I wouldn't, like, all of the waste of time, all of everything I did trying to be smarter than this protocol that was cooperative, ended up flushing me.
Yeah.
Right. And then they come in and they hold.
Yeah, when you could have just bought and hold at the beginning. I mean, I was actually one of those people. I bought, do you know the ETF BITI?
Yep.
The short Bitcoin, the inverse Bitcoin. I was stupid enough to buy that, and I held on to it, and I lost something like a few $1,000s. But I mean, I that's what made me realize that, oh, okay, I'm wrong. I don't know what I'm doing here. The best thing you can do is just buy and hold. You can't.
Yep.
You don't need to do You don't need to do anything else, right? You can maybe buy proxies that give you a better return, but even then, I think the only one that's worked so far has been MicroStrategy. I don't think anything else has really worked.
Yeah, and we'll see, like, for how long.
Yeah.
Right? This is still the safest bet. You only introduce counterparty risk when you choose to introduce counterparty risk.
Right. That's a great point.
Right. There is no counterparty risk on this asset unless you choose to introduce counterparty risk. If you want to take counterparty risk for a higher return, then just know the cost and that
Yes.
of that higher return, and be comfortable with the cost of that higher return. It reminds me of Hodel and I were in Nashville, I guess beginning of October at an HRF thing, and he's been in this for longer than I have, and we were talking about just the people that we've known that have kind of come in as heroes to try to win the system, try to cheat the system, right?
Mm-hmm.
And been flushed because you're playing by different rules on a cooperative game. The cooperative game is cooperate on this network, you do better.
Don't cooperate and you lose.
You'll eventually get killed.
Yeah. You get destroyed. It's crazy, and it's. I have a feeling that there's going to be a lot of people who are going to lose this. They're going to learn this lesson, and I have a feeling part of the reason why they're going to learn that lesson is because they're going to sell covered calls on the Bitcoin ETFs,
right?
Because that's where you're taking that. You're getting that counterparty risk now. A lot of people think that selling covered calls isn't leverage, but I see it a different way, because what you're doing is you're using your entire stack to generate a very small return. It's like if you were to bet on the favorite in a basketball game, you're still using leverage, right? You're still betting. You're still possibly losing everything, but I don't think people see it that way, because in the old system, let's say the S&P 500, how big are the moves in the S&P 500? Maybe 15, 20% in a year. With Bitcoin, you could see 30%, 40%, 50% in a week.
Yeah, and we don't know in a day, maybe. Right.
Yeah.
So on some of on what's to come on this, just there's never been another asset protocol. There's never been anything like it before. So likely the same risk analysis that you're using on all of your other trades are wrong here.
Yeah. Yeah, and in the old system, of course, there's also the other part of what you were saying there. You can't get out of counterparty risk. Like when you hold stocks, you have to hold them with a custodian. You have to go through a brokerage. When you hold real estate, you have to give somebody else full control of your property if you want to earn cash flows. Unless you sit outside and you just watch whatever they're doing. I mean, they're probably not going to want to pay you rent if you do that, but you have to take counterparty risk in the old system. With Bitcoin, it actually gives you the choice of not taking counterparty risk.
Yeah, and think about the counterparty risk real estate. So what would happen? Remember I said before, is would anybody vote to allow the system to collapse? Because if they did, there's $400 trillion of debt in the world, and all that debt's already insolvent. If you try to pay it back at $1 a second, and I'm not talking about the unfunded liabilities. I'm just talking about the debt, global debt. So the global balance sheet, if the global balance sheet was 900 trillion and the debt is 400 trillion, and you tried to pay back the debt at $1 a second, it would take 12,875,000 years to pay back the debt. So we already know it's insolvent.
Yeah.
So your house is sitting on top of that insolvent pile of debt, and if it became insolvent like that because we didn't print more money, then your house would not be worth close to what it is today. It would be the asset value would collapse.
Yeah.
From that. So everything in the world sits on top of the counterparty risk of the prevailing system of the world that most people are pricing from, and they don't see that it all has counterparty risk, and that counterparty risk then gets even worse than the counterparty risk because it has to centralize further. It has to remove individual rights and freedoms. It has to misallocate capital at a greater and greater rate. Like if you think about what Elon and Trump are promising right now in the election and the Department of Efficiency, if they do that at this time, and I'm not saying they shouldn't, there's so much waste, but the waste is the system trying to grow because there's not enough free market jobs to support all of that capital. So in other words, government creates more and more jobs to be able to deploy more and more capital to make GDP go artificially high. So a whole bunch of waste is there. That is the misallocation of the system that then centralizes and smothers the free market. And it has to get worse and worse and worse. Ripping that off right now with 120% debt to GDP virtually ensures a deflationary spiral.
Yeah. So
Because
do you?
all of those people, right? Think about all of those people, um, all go to restaurants.
Yeah.
They all travel. They all probably have 2 cars. They have houses. They have, and so just imagine how many people that you would lay off from that, and then as they try to find new jobs in the free market that just aren't there.
Yeah. But I
Right?
mean, I think I see what you're saying. Most people won't want that, but I also see the other side of it. If that happens, it gives more people a reason to start their own businesses.
I'm just saying I'm just saying in the interim.
Right, right, right.
So in the interim, what would happen? Let's just play this
It'll
out.
fall apart.
Day one, right?
Yeah.
Day one, they can't pay their mortgages.
Yeah.
All of those people, right? They can't. So they need a bunch of them need more government assistance as they can't pay food banks, government
More printing.
assistance, and everything else. There's not the jobs in the free market because we've already misallocated capital so badly. We've destroyed the jobs in this free market in favor of
Yeah.
the centralized government. So switching that back on a dime, all of those people create more printing in the government to be paid more debt to be able to service all of that, because you're not just going to throw them all out in the street.
Yeah.
Right. And so the debt to GDP, the GDP comes down, the debt goes up.
Yeah.
In that environment. So that looks a lot like in their early 30s, right? The
Great Depression.
Great Depression. That's what it would look like. So the other way to do it is, which I don't know how this is going to be played, but the other way to do it is drive way more inflation to have debt to GDP come down before you do it. So I'm not questioning the policy. I'm not saying I'm trying to be neutral here.
Of course.
I'm not.
Yeah.
I'm just saying the mathematical cost of these things on a ticking time bomb of debt.
Yeah.
Has a chance of resetting the entire debt instrument.
Yeah. It's gonna. I think it's gonna be. So how long do you think that this could take? This whole transition between. I think it could take decades. I mean, I don't think it'll take. Some people think it'll take until 2030, till 2020, 2026. But I don't think it's. I think it's gonna take longer.
So it's funny when people ask me that question, and so I'm already living in the Bitcoin standard.
Right.
I get paid in it. I pay people in it. I try to pay in it every day. I price my world in it, and so for me, I'm already living in this version of the world. And it doesn't matter if that version has a debt collapse and all prices fall way faster than Bitcoin.
Yeah.
Right? Or if there's hyperinflation and Bitcoin rises way faster than all prices. For me, it's the same. It doesn't matter.
Thing.
It's just totally. It doesn't matter at all.
Yeah.
But most people in the world are playing the other game, and they're getting whipsawed back and forth, and they're going to get very whipsawed.
Yeah.
Out of that, because they're trying to price this from this other system that is going to be volatile with increasing volatility. Right?
Yeah.
From the system you and I are measuring from, it doesn't matter.
Yeah.
My house is falling in price. It'll fall in price with printing, without printing. My energy prices are falling. They'll fall with printing, without printing. The honest protocol, the honest money is repricing the world.
Yeah. Do you think that okay, so I've always tried to make this this prediction. I think that house prices are going to drop significantly because like we're talking about here, the part of this repricing is people moving from housing as a store of value to Bitcoin as a store of value, from stocks to a store of value as a store of value to again Bitcoin as a store of value, bond as a store of value to Bitcoin as a store of value. So do you think that house prices can drop to, let's say, 100,000 satoshis?
Yeah.
You think so?
And maybe lower in time. We have a false sense of what a house is because it's instead of it being a utility, now it's a store of value.
Yeah.
And so if you we can't even relate to how much it's turned into a store of value instead of a utility. But here's a reference point that I've talked about often. So in the early 1900s, kind of call it 1920s, you have a Sears home delivered, a catalog home delivered, 2,500 square foot home delivered for $2,500.
Wow.
That included all the lumber, all the windows, all the plumbing, all the electrical, everything. You had to build it, the roofing, but it had the entire package. So you had to have the land. The land was super cheap as well. For $2,500, every single item I just described in that home has been automated and it would be way cheaper today if you were on a hard money, right? So that $2,500 in real money might be, with the amount of innovation that's happened in markets, supply chains, and everything else, might be $250. Might be less than that.
Wow.
Right. So that's because all of those prices would have fallen to the marginal cost of production as well in a normal market. This is what free markets do. I flew from Mexico to Vancouver yesterday, and I just, looking out the plane, the amount of land, right, or across the U.S., the amount of area around in the U.S., and we're all clustered into these regions that we have a perception of it has to be this value because it's always been this value, and it's that value because we're manipulating money. It doesn't look like that, and it won't look like that in the future. Prices of houses measured in Bitcoin are going to fall forever, and they're going to fall a lot.
Yeah, and they're going to fall. Do you think that people will continue to just passively invest in stocks?
So, but the same thing, Preston Fish does a really good job on this. If you look at the earnings on a typical stock and how outrageous multiples are right now,
30, 35.
It's so like
Even
it
higher.
takes 35 years, right?
Yeah.
To be able to get back your principal against the risk of all of the against the risk of that company, all of the different things that could happen in that company in that time. It's like but relative to other investments, when measuring from the fiat mindset, it makes sense. Same as relative to other investments in the fiat mindset, housing makes sense. So they can detach from a lot from reality, because that reality is all driven from, I'm just going to create more pieces of paper.
Yeah. More paper chasing the same number of goods.
Exactly.
Just over time, it keeps going. And at the same time, we get better and better at building things. We get better and better at making even dollars. We get better and better at issuing shares. Before, for example, maybe you'd have to issue stock certificates. Today, how many stock certificates is Michael Saylor issuing? No paper is involved, right? He just creates them and he gives them out to people, right? Like, and it just gets easier and easier to make more shares. Of course, with shares, I think it's a little with certain companies, though. Of course, it may be worth it on a Bitcoin standard, but I think that'll probably be just a complete, again, paradigm shift of what kind of services they provide, what kind of offerings they have.
Yeah, so in both systems, in one system you have the technocrats talking about building the first $1 trillion company with one employee. And with where AI is going, you could see that actually happening in time. And arguably, you could only see that happening from within the distortion of the fiat mindset, because one employee, a company would never look like that, right? Prices would fall, and they would fall, and they'd fall, and that one employee might do very well in the free market. But if they had $1 trillion value in one employee, then everybody else would copy them, and prices would fall too. Yeah. So if you're measuring in if you're measuring in Bitcoin, what it means is for all the entrepreneurs starting Bitcoin, then making today 50 or 100,000 satoshis a month with whatever you're doing might be far more valuable than trying to make $200,000 in fiat today, a year in fiat. So you could actually put your time into a network that's increasing in value and gaining a bunch of value there, which doesn't require you to build this giant construct in the other in the other world. And on those satoshis are going to be worth a lot of money in time.
A lot more, yeah.
Yeah.
Wow. It's I think it's one question that I really wanted to ask you. I really want your thoughts on this. It's so important to look at just the and it's actually very abstract when you think about it. I think it's so important to look at the downstream effects of Bitcoin. And I ask this question to all of my guests. So the question is, what do you think is? I have an idea of your answer, but what do you think is the most important downstream effect of Bitcoin? Just like long term, 20, 30, 50, 100 years from now.
8 billion people in service of 8 billion people.
Wow.
8 billion people in service of 8 billion people.
Yeah.
Every idea, what you and I are doing right now, what you said that I helped you understand this, and now you're helping a whole bunch of other people. That's what society looks like. And each person contributing in honesty to a system that helps all people, and
Yeah.
all the progress is broadly distributed. You winning means someone else wins too, instead of you winning and somebody else loses. That's the paradigm shift. That's what's happening in this system, and it's inevitable. Why is that? Why do I'm convinced that that's inevitable? Because we are Bitcoin. We are actually Bitcoin. We are the nodes that protect it. We are the entrepreneurs that are building on top of it to make sure it stays decentralized and secure. We're all of those things, and why it's chaotic, messy, chaotic, beautiful, all of those things at the same time, is because once you understand that we've never had something decentralized and secure, open, decentralized, and secure, and we've always lived in this extractive economy. Once you understand what that means, you're never going back. You contribute your time, and by contributing your time into the new system, what are you doing with it? You're inscribing your time into the network that's the network that's the best for all of us.
Wow. And I think holders actually have a very important role in this, because what holders are doing is they're decreasing the supply, and then they're actually helping the network become a lot more powerful, because if they hold on to their Bitcoin, the rewards that miners get increase in value, which gives more miners an incentive to provide power to the network, which makes it so that the network becomes even more secure, which makes it so that people value it more. And it's a flywheel.
You could say what you said, holders, yes. So people in self-custody. You could say podcasters that are trying to bring this to more people. You could say people who are running full nodes, protecting the network. You could say developers that are doing this. It's the way the world moves. Like I think about the cypherpunks that knew this far before I knew it, and many of those people failed before Satoshi came up with the discovery of how to put it all together. But all of those failures were also critical in getting us to this point. Right, and what I'm saying is, we live on top of of all of these people, whether they failed or not to get us here. That's what the world that's what the world looks like, and you're contributing. You personally are contributing your time to this network that frees 8 billion people from an oppressive system of extraction. What it means is, in 50 years, 100 years, people might not know your name, but they'll never forget your impact.
Yeah. The impact is going to be there. It's going to keep contributing to the world basically forever, right?
Yep.
Like your book, for example, the fact that I understand that houses are going to come down, I don't even need to think about the concepts that you I guess explained. I don't even have to think about it, because it just becomes ingrained in society at some point. People stop buying houses as a store of value because they see that what you're saying is coming true. It's the reality.
And then what happens again, because houses are utility value instead of a store of value. Neighborhoods heal.
Yeah.
right? Families start bringing up their families in subdivisions that are together again instead of something that's detached. And all of these things are just natural second, third, fourth order derivatives of sitting on top of an honest system, an honest protocol.
Yeah. Wow. And it just, I think it goes so deep with people. They just, like I said, it's almost like an abstract idea at this point. Giving everybody self custody. Wow. How's that even possible?
Yep.
I mean, I don't think everybody can have self custody, but you know what I mean? Like, we have a system now that's not, if one bank collapses, it's not a domino effect for the entire world.
Exactly.
Right. And
Yeah.
that's what changes things. Because now, let's say, for example, one bank collapses, somebody else takes over their assets. The problem is done. And now there's no contagion. Of course,
Yeah.
in the fiat currency system, there is contagion with Bitcoin because, let's say, when FTX collapsed, there were a bunch of other collapses. But if we have, like, let's say, a Bitcoin bank, this Bitcoin bank is going to take loans, or they're going to take deposits, and they're going to give out loans. If that's where the world goes, I don't know if that's where the world will go. But if they were to make some kind of mistake, maybe they'll have enough collateral to pay back some of their depositors, but the depositors are the ones who take on that
Right.
risk, and they're the ones who lose, not the rest of the world.
Yeah, and that's what. But if you just play on that specifically, what you just said, that's actually why that mental model, that shift from because it's not a deflationary currency, it's it it's a neutral currency that imposes the free market, which is deflation. So the faster rate of deflation from the free market, which should be an accelerating rate as we automate and move more into technology, should be faster and faster all the time, would mean so people measure inflation from zero, and they shouldn't be. They should be measuring inflation from the natural productivity rate in the market, which is deflation. So now that construct is so hard, so seemingly so hard to understand. It's just not hard for me to understand, but how many people I've tried to, and because it's shattering every belief they have about how markets work, right?
Yeah.
And they're having to, but if they try to play the leverage game on this, it means the debt gets more expensive at that rate each year. And
because they're borrowing more and more money, and they're
they're
demanding it. Yeah.
and instead of the debt getting less expensive because it's on an inflationary currency, and your wages going up, your wages are going to come down.
Yeah.
Right. But your prices will fall faster than your wages coming down. So if you have that inverted, because you've always had it inverted, whether you're the lender or the lendee, people are going to just get murdered by what I just said.
Yeah.
Right.
Yeah. And I think there's also another angle to exactly what you're saying here. You're saying that the wages will decrease, but the price of things will decrease as well. It'll decrease faster. I think there's also the other side of things where your wage will decrease, but your savings purchasing power will increase.
Yeah, that's what I'm saying.
Oh,
So
right. Okay.
yeah. So
And
what I'm saying is wages are sticky. Why
yeah.
inflation works and why it's such a usury tax, which is such a terrible tax, is wages are sticky. So you don't get wages as fast as inflation happens, and you don't see how much inflation is actually happening from the true rate of deflation in the market. So
Yeah.
you think you're winning because you're winning relative to other people because you got a $2 raise this year, right? And all prices went up way faster than that. But if wages are sticky, then the same thing happens in inverse on Bitcoin, right? Your wages won't fall as fast as they should, meaning a huge rise to the middle class and poor.
Right.
Right.
And I think part of that is also because employers are going to have a harder time paying their employees less because their employees are going to question it.
Yeah.
Right.
Yeah.
Like today, they can give you a 1 or 2% raise, and you're going to be happy because you see, oh, I went from earning $50,000 to $50,500. What am I going to do with this extra $500? That's what you see. In the future, let's say your purchasing power is $50,000, and then they try to cut you down to $50,500. They're going to have to take some satoshis away from you, and that's what people are going to be confused with. They're going to say, oh, I'm not accepting this cut, so I'm going to work on building my own business, or I'm going to go to another company, or
I'm going to provide more value.
yeah,
And
there you go.
the more value that more of us contribute in the world
Yeah,
means faster deflation.
right, right. Wow. The deflationary, I think just that, just the way that you say it, the natural state of the world is deflationary. That I think that really clicks for a lot of people. I've talked about it in a lot of podcasts. I've been spreading your word, been spreading the everything that you say. I mean, it's hard not to understand it. Once you see it, it's hard to unsee it because it's the reality. It's just where things are going. You were saying that you bought a house for I don't remember, was it 300 Bitcoin and now it's down to like 18 Bitcoin or something like that?
Yeah. So when I first so last year at this time, or I guess 4 years ago at this time, probably the house was worth about 100 Bitcoin. When I first did that calculation, it was in the lows of March 2020, and the house would have been 300 Bitcoin. And although it had gone up from 1.4 million Canadian dollars to 2.1 million dollars in that same time frame, it fell from 300 Bitcoin to a 26 Bitcoin during the same
Wow.
time frame. Now, if you just did it right now, I think it fell from 100 Bitcoin to today 18 Bitcoin.
Wow, that's crazy. I was also seeing just that alone. I mean, I think that makes a lot of. I think that just makes it click for a lot of people. When I heard you say that for the first time, I was thinking, oh, it is happening. It's the reality. Have you also seen there was this article from the Toronto Star that or sorry Toronto Star that said I think something like 57% of condos are owned by investors in Toronto, and
Mm-hmm.
I think Toronto and Vancouver,
Yep.
which is this crazy 57%. So all these people are literally buying these condos to save for the future. They're savings accounts.
So, which would make sense if you're in China and you know your dollar is going to get destroyed. What are you going to do? You're going to put it
Get rid of
somewhere
it.
else where it has less relative
Yeah.
destruction, still destruction, but not as much destruction.
Yeah.
So
Yeah.
that's what happens around the world.
Yeah. And people are figuring it out. They're getting away from the current system. Jeff, I want to be respectful of your time here. I have one last question for you. Do you have any other final tips for my audience here?
Oh no, I don't think I have any final tips. I just like to thank you again for what you do, because each voice again moving over to this system, and you're spreading it to more and more people who will come back, and even if they don't know it was you, if it came through you from somebody else to somebody else, and then that touched 10 million people, it's a huge win.
Huge. It's just absolutely insane. And Jeff, I want my audience to be able to find you. I know you're mostly on Nostr. Or
Yeah.
you don't post on Twitter anymore, do you?
No, I stopped on Twitter just for the very same reason. I was giving my energy to the system that I wanted to see in the world, and 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 I worry about the centralization of. So Twitter today, people would say, okay, well, it's not centralized; it's for free speech, but it can't be,
Right.
because because for Elon to want to sell cars in China or satellite systems in China, he's going to have to listen to what the Chinese government says or different governments say. So having a centralized ruler of a new control system is just a faster control system.
Yeah.
And so I and by the way, if for anyone that's not on Nostr, yeah, I suggest you really go and look at it. Even if you did, I think now in a year or so, I guess just over a year, maybe it's coming up to two. I can't remember when it started, but I think I have 135,000 followers on Nostr already, and I have more engagement than I ever had on
Wow.
Twitter.
Yeah, so I mean, they push good content. You post great content, so that makes a lot of sense. So what I'll do here is in the description, I'll just link your. So I think I think the best thing here to do would it be to link your website? Do you have a website?
Yeah, do the website, and the reason the website's important too is if I'm on a social media platform, it'll be listed on the website. If I'm not,
Oh, perfect.
if it's not there, it won't be on the. If I'm not there, it won't be on the website. I have on Instagram. I have validated users that are me that I'm not on, right? So I have
Wow.
friends that are on Instagram saying, just I follow your content on Instagram and I'm not on Instagram. So,
Yeah.
so you just have to be, people have to be really careful out there. I want to say this too. I will never ask for money. So if somebody DMs you for money, it's not me.
Mm-hmm. Mm-hmm. Yeah, I have so many of those on Instagram. I think it's worse than any other platform because I don't think they have any kind of rules for that. They
Yeah.
just let everybody just run free, do whatever they want to. Okay, perfect. So I'll link your website in the description. Um, I think that's about it. That was a great conversation. I really appreciate your time, Jeff.
Anytime. It was awesome. I look forward to meeting you in person.
Absolutely. Are you going to be in Vegas for?
Haven't decided yet.
No.
But likely.
Okay.
Yeah.
Okay. If you're there, I'll see you there. That'd be
Okay.
awesome.
Awesome. Awesome.